Right, so welcome to the event today. It's on top tips on money and taxes for Locum Pharmacists with Guerrilla Accounting. Now, we've done some events with Guerrilla in the past. They're on the preferred accountants on our network as well. And they've done some really good, helpful tips on money management, on tax, and how to set up your company and all sorts of stuff. So I'm going to hand it over to Daniel to introduce himself and Guerrilla Accounting to the audience today. So Daniel, over to you.
Great, thanks, Soheedal. Good evening to everybody. Thanks for your time today. So we are Guerrilla Accounting. We're a national accountancy firm. We specialise in the self-employed market. So we've been going for about 7 years. We've got about 3,000 clients, all of whom are either locums like you guys, self-employed consultants, contractors, freelancers, etc., buy-to-let landlords. The majority of them trade through their own limited companies. So this is something that we live and breathe. You know, every single day we're advising people like yourselves on the ins and outs.
I need water to grow.
Please just mute your microphones, guys. There's still some interference coming through. So we live and breathe your world. We regularly give commentary in the press on these types of things and the type of issues that you'll come up against. I'm Dan. I'm one of the directors, one of the founders of the business. I've got my colleagues, Richard Hepburn, attending. Richard's our operations manager. He manages all the accountancy teams. We've got about 50 staff in the business. Who all work on clients like yourself. I've also got Craig Whelan attending, who's also one of our senior accountants, and he heads up the new business team. So we have a specialist team that does the initial consultations, find out where your affairs are up to, and then answers all the questions. So again, he's well placed to deal with the types of things that you guys will be coming across. So in terms of today, as Soheedal said, we've done a few of these events. We did one, myself and Craig did one very similar on Friday to some marketing consultants. And we found that the best way to do these, we don't bother with slides and presentations. We tend to just do a survey, ask you guys what kind of things you come up against, what kind of things you want us to talk about, you want us to clarify, and then from that we'll reverse engineer some answers. We've not had anything from you guys as of yet, but we've put some of our own together, the typical problems that we come across, the typical mistakes that we see, locums and contractors making. And hopefully we can give you some tips and advice today. I appreciate there'll be some very different experience levels amongst the attendees today. So we'll try and cater for everybody. One thing to point out today is that we're hoping to have a financial advisor, one of our partner financial advisors, attend the call as well, but unfortunately he's not able to. We're not financial advisors, we are accountants, and with that there's some limitations on what we can and can't advise on. So although we can highlight things like, there are some tax saving strategies, personally, things like EIS investments, there are things such as pensions, stocks and shares, ISAs, etc. We can highlight those things and the benefits. We cannot advise you on the merits of one particular investment product over the other. Accountants are not allowed to do that. That's a job for an independent financial advisor. So, but we will obviously advise as far as we can. So, without further ado, we'll kick things off. The first thing that we want to talk about is the differences between limited and non-limited structures. I understand that the majority of you guys are probably DIY when it comes to accountancy. So hopefully there'll be some good stuff in here for you guys in particular. Richard will kick us off and just talk us through the advantages of limited and non-limited, and how one versus the other can give you some optimum tax efficiency. Richard, do you want to kick things off for us, please?
Yeah, I'll get things going. So if you start working for yourself as self-employed, most people probably look at being a sole trader first of all, but it's not always the best way to structure things. Actually falling under the self-employed routes can also, work along with working through a limited company. So there's a bit of a difference between each option. So we'll start with the sole trader route. So with this way, essentially you've got all the money is attributable to you. It's taxed all in the same tax year, and whatever you receive, the profit is worked out, the income less any allowable expenses, and you would then pay income tax on that. That's your marginal rate, which would be 20%, 40%, and so on. And also class 2 and 4 national insurance. So this is one of the key differences, is that you'll be paying national insurance on your profits in the same way as an employer would, or a very similar way as an employee would. Sorry. And basically all the money would come to you and is taxed in that particular. So with the limited company route, this is usually a more favourable structure as far as tax purposes go. It's not always possible to go down this route, as some of you may have found, but it's usually the most preferable route. The reason being is you're going to pay a lower rate of tax. So you can pay yourself a salary, providing your engagements are outside R35. That salary can be at any level that you want. And with that in mind, you can structure it at a level which is at the national insurance level, around 9,500, and avoid paying any national insurance on that salary. Any remaining funds can be taken out from the company after the company pays corporation tax, which is 19%, and you can take that out as dividends. And the reason this is more favourable is because there's a £2,000 tax-free dividend allowance. You get your personal allowance in the same way as you would as a sole trader. And then up to the high rate threshold, the dividends are taxed at 7.5% above 32.5%. Benefits of this is you can structure your company to have more than one shareholder. This is usually possible if you're married, because there's a spouse exemption from gifting shares. So if you're married or have a civil partner, you can have a share structure set up so you both receive income in the form of dividends from the company. And in addition to that, there's a bit more flexibility in what you can do. You can take dividends from the profit whenever you like. You can keep the money in the company and let that build up, and just pay tax on the dividends up to the high rate threshold if you wanted to, of course. So it does work out a more favourable option. There are a few other differences. But
sorry, Rich, can I just interrupt there? Because one of the very common questions that we get from clients, and I know this has been a big query with previous events that we've done, is if I'm a locum, I'm trading through my limited company, I'm taking the optimum balance of salary versus dividends. How do I keep track of what's mine and what belongs to the limited company? How do we have visibility on that? Do we have to wait until the end of the year, or is that something we can address monthly? Yeah, I mean,
it's a lot easier to track these days, and the best way of doing it is use accounting software. All our clients use Frasian. We work with them on that. And the benefit of that is this bookkeeping tool. It keeps you up to date with, track your invoice when they've been paid, record your dividends, your payroll is recorded on there. So you know where you stand in that tax year. You're not waiting until your accountant, does your accounts at the end of the year, or, you've got that bit of control over when you're taking the money. And for us, the way it works really well with us, because we can advise our clients, let them know where they're up to at any particular point, look over the software with them. It's a great tool, really.
Yeah, I think just to pick up on that with the bookkeeping that Rich has just touched on, we do get asked the question a lot: how do we help our clients, be as tax efficient as possible? And I think one of the key areas that we would always say is ensure that everything is kept up to date on an ongoing basis. So, log in your income, ensuring that's up to date. A lot of you may use spreadsheets or even, paper-based invoices, receipts, etc. An online portal really does give you that flexibility to view everything on an ongoing basis. You know where you're up to throughout the year. So it's not getting to the year end and then in hindsight, saying if you'd have done X, Y, and Z, 10 months ago, you'd be in a better position. And that's the way that we work. So Free Agent is constantly up to date. It's a live accounting portal. And the rule with, taking a dividend is if you can prove the profit's available and the company can afford to pay the dividend, it can be taken technically at any time. So we get a lot of great feedback from our clients on that. But I would say, the key number one factor for being able to optimize your tax efficiency is ensuring that your bookkeeping and record keeping is constantly up to date, which Free Agent really does work well with. And that allows our accountants to proactively advise you because we're fully aware of your situation on an ongoing basis.
I think that's one of the key points with accountancy and tax management and financial management generally. Obviously, we're going through a period of digital acceleration when you've got things like making tax digital coming into play, and there's some future changes coming around that, which we will elaborate on shortly. But if you or your accountant are still using spreadsheets, then it's probably time for a change because they're quickly becoming things of the past. So our advice there is whether it's Free Agent or one of the others, please make sure you've got a very up-to-date bookkeeping tool. There's things on these things, whether it's Sage, Xero, Free Agent, etc. There's plenty of them out there. The advantage of Free Agent is it's designed specifically for people like you. It's designed specifically for one-man bands that are trading through limited companies, and you can do some wonderful things on it, that will save you a fortune in time. Things like, taking photographs of expenses, taking photographs of receipts, that type of thing. So you're not manually having to input or type dates, amounts, VAT numbers, etc. It will automatically populate these things into your books in real time as well, which is, so you've got a real time P&L account 24/7, which again will just, when you're busy people like you guys all are, it's just a little tip that will ultimately save.
Just a quick question, Dan. So anyone who signs up with you guys, they get a free access to Free Agent, is it?
Yeah. So as part of our service, we provide Free Agent access to all of our clients within our monthly accountancy package. Be that sole trader or limited company, which Free Agent covers both of those trading styles. So that is covered as part of our service.
We get a lot of clients switch from other firms, if they've already set up on Xero, for example, they're used to Xero, they like the way it works. That's fine. We're a Xero approved partner, and we can make that work. But our advice would be Free Agents. Free Agent's excellent. If you're thinking of getting an accountant or even doing it yourself, we'd still recommend that you look for an accountancy firm that uses Free Agent, because for you guys it's the perfect tool.
I'd just like to add as well, I think with paying dividends, a lot of guys would move over to locum or freelance role, and like us, have been paid a salary, and they've been used to all the tax being taken care of. So it's important to track the dividends, how much you've been paid throughout the year, because you're only going to be paying that tax bill the following year on the self-assessment. So getting that advice the year you're taking the money and keeping track of it is really, really very important.
Okay, so moving on to the next topic, all these things tend to flow into the same topic, but the next one we just want to touch on is expenses. People tend to focus on the income side and not give too much attention to expenses, which is equally as important. In terms of allowable expenses, Rich, is that something we can just talk the guys through? I mean, we've seen it all. I think people, when they've got their own limited company, there is the tendency to get a bit carried away. We've seen, Rolex watches, family holidays, all put through the books. So again, in terms of some advice around that, Rich.
Yeah, definitely. I mean, there's some of the common ones which you probably would know about, like working from home. There's an allowance for that, £26 a month. And there's a similar thing for sole traders. It works out a little bit differently for them, where it's based on per hour. Claiming a mobile phone, we all have a mobile phone. And if you use that for work purposes at all, you can get that in the company name and have that paid for. Obviously, things like, insurances, subscriptions that you might have, professional subscriptions, which, you will have similar to accountants, those subscriptions. And one of the things we get sort of asked about a lot is company cars. What we do need to look into each specific scenario, whether it's worthwhile getting a company car, because really what you've got to weigh up is the tax implications of the company paying for it, where it generates a benefit in kind. So if you're looking at, zero emissions cars, electric cars, there's, some good enhancements there. They're actually 0% in the current year, and it's going to go up to 1% and then 2%. But if you've got a car with high emissions, you're really going to get hit hard with the tax on that, the company car. And it usually works out better to purchase the car or lease the car personally. And if you're traveling about doing business miles, claiming the 45 pence per mile, so that's something, you've got to look at a case-by-case scenario. And people don't realise the actual benefit in kind is a percentage, and it's worked out on the list price of the car when it's new. So if you bought a car for £2,000 second hand, or £5,000, the benefit in kind would be calculated on that price when it was new. So it could be a lot higher than a lot of people would expect. We usually would look at that, and depending on what car they're getting, but often, claiming the mileage and owning the car personally works out the best way to go if you're traveling around and doing business miles. So that's another one. Obviously, if you're out and about, again, similar. So if you're eligible for travel or mileage, you can claim for your meals while you're out and about working at temporary locations. Anything, and then it's everything you require to run your business. So if you need computer software, a computer, obviously accountancy fees if you're going to use an accountant, all these things are allowable if they're genuine costs or genuine things that you incur while running your business.
I think one question that, one scenario that comes up quite a lot with myself, obviously dealing with new inquiries, we will get people asking, can I put all these expenses through? And one thing to consider, yes, whilst putting an allowable expense through is going to reduce your corporation tax. Ultimately, if those costs aren't necessarily incurred for the need of the business, you are technically eating away at what profit you have to pay out as a dividend. So, we would always say only put the costs through that you're actually incurring that are for the need of the business. Yeah, you will receive the tax benefit on those, but putting anything above and beyond that, for the sake of saving the corporation tax, quite a common, misconception. It is eating away into your profit and ultimately what you potentially have in your personal account at the end of each month. So, as we say, anything that's wholly and exclusively for the business, incurred for the need of the business, that's absolutely fine. But, don't be doing anything above and beyond that.
Definitely.
Okay. So I've just got one question, and I get this one quite a bit. And this is about going back to the electric car. So some people that want to buy, say, a Tesla, they'll buy it outright in cash, £30,000, £35,000, whatever it costs. In that kind of scenario, how much can they claim back on their tax of the initial purchase price?
Yeah, so it's you get that you get the full allowance on that cost in the year of the purchase. But it's not necessarily the case for all cars. So again, it's looked at on the CO2 emissions of the vehicle. So it's a lot better for electric cars, and this is the big difference because not only is the corporation tax allowances it's different because you don't get it in each year for other cars. It's a percentage, 9%, and then the next year you get 9%. That's for the more less fuel efficient cars, but also it's not just the individual gets hit with the benefit in kind. So when we calculate that benefit in kind, which is going to be next to nothing for an electric car, the company has a national insurance charge. So it's Class 1A national insurance, and it's 13.8%. So if you're the owner of your business, you're going to get a personal benefit in kind charge on your own tax bill. And your company, which you are the owner of, receive dividends from, is going to get a tax charge as well. So often the tax consequences of owning a company car are just not worth it.
So it's still cheaper, or it's still better to claim the mileage at 45 pence than to put a company car through.
I'd say the only exception is electric cars, if that's what's
apart from the electric cars, yeah.
In almost all, unless it's got really low fuel emissions, which is really electric. Some hybrid, even though now they're taxed at a higher rate. But when you start looking at cars with high CO2 emissions, it's crazy. I mean, I've got a table in front of me. They go up to 37% of the list price. So that's, like I say, if you've got a £40,000 car, you're looking at about £15,000 tax. You'd be taxed at your whatever rate you pay tax on that £15,000. That's each year, so 40% or 20%, and that's the same for your company that pays a 13.8% national insurance charge on there. So I mean that's extreme, but if people are looking at cars with big engines that might seem appealing, if you think the company's paying for them, you've got to think of the tax charge as well. That's your company's going to get hit by that.
And so this is only for the limited company, isn't it? Is it the same for sole traders?
So for sole traders, you've got two options. Now, as a sole trader, if you want your business, so your sole trader business to pay for these costs, it's only for the business element. So there's two options. You can either go with the mileage, so you pay for it yourself. So that's completely separate to your sole trader business. You pay for the vehicle yourself and claim mileage at 45 pence and then 25 pence. Or you proportion the amount of business use. So let's say you use 50% of the vehicle for business, then you can pay 50% of the cost of the car, 50% of the cost of the fuel, and in practice, it's pretty difficult to record that. There's some trust really from HMRC's side, and I think that's why they were now allowing to claim the mileage and just go with 45 pence per mile in the same way as owning it for your limited company.
Just want to clarify about the mileage side for sole traders, because we've had other accountants say that if you're a sole trader, especially in the pharmacy side, you're not allowed to claim the mileage as a sole trader, whereas it's only for limited companies.
Yeah, no, you can do. It's changed in the last few years, but it's like I said, it's got to be kept separate. So you can claim mileage. HMRC do now allow that. Okay. I've just got a question here. Can you pay for fuel with a personal account, then reimburse your personal account monthly from your business account using 45 pence mileage expense? Yeah, that's the way you should do it.
That's how it should be done, yeah.
Yeah, all costs should be paid for personally, because in that 45 pence per mile, it's not only the fuel cost, you're getting reimbursed for wear and tear. So the 45 pence should cover more than the fuel. So you should keep track of log of all your mileage. Again, that's one of the things the bookkeeping tool that we use is useful for, because you just plug the number of miles in each week or each day, and it'll show you how much is owed to you, and you transfer that from your limited company to your personal account. But the cost of fuel, servicing, new tyres should all be paid for personally.
Cool.
Any more questions on that, Toledo, as a topic?
No, I think for the car one, that kind of, because we had quite a bit of a debate back and forth between a couple of accountancy firms. Can everyone put their mics on mute, please? About the mileage claims, and one of the accountants called up the HMRC, and I've actually spoken to them myself, and they said, look, it's quite difficult because it depends on the actual type of job you do. But for the pharmacists, when one of the accountants called up, and I've kind of been through the conversation with them as well, they said, no, you can't claim the mileage. So just want to clarify exactly whether you can or you're not, because we've had a lot of back and forth about this.
So this would be something that's linked to this. So to be eligible to claim for these, it's got to be classed as a temporary workplace. So if you're going to the same place to Locum, that's the only reason I could see that they would say you can't claim for mileage is if they're determining that place that you're going to is a permanent workplace, like you're spending too much time there, which is if you're working at the same place for 2 years, or it becomes more than 40% of your working time there. So that's probably what that is. But if there's anything else that they provided, then we'll have a look over it. But that should be the only reason why you wouldn't be eligible for the mileage.
Okay, that's fine.
More questions come in there. Sorry.
Yeah. I'm asking okay. When you claim for mileage, does it come off your total tax calculation as an expense, or does it come off as a separate reimbursement? I'm only asking as it hinders affordability calculators when you show a net earning of sub 25k, which can happen when putting in all your mileage claims.
So there's two things happening. It's a business expense, so it reduces the profit for the company and the tax that your company is going to pay. So that's one thing. So you look at it from the business side, and that expense is then paid to the employee. So you will be an employee of your company, and you would receive that tax-free. So hopefully that's answered it. Yeah, whatever's calculated by the mileage is an expense for the company and will reduce your taxable profits.
Okay. Can you explain that for sole traders?
It's the same thing with the mileage. Other than that, like I said, if you've got the other way of calculating it allows you to do that is to pay for the actual costs, but only the business element. So if you've got a car that's part personal, part business as a sole trader, your sole trader business can pay for the business costs, but you need to calculate the percentage that relates to the business and the percentage that relates to personal use. Other than that, like I said, you can claim the mileage, but pay for everything personally.
Okay. Hope that answers the question, Sonny. Does anyone else have any questions about that?
We'll move on to the next topic.
Move on. Yeah.
Just to point out, we will be following up in writing next week, and we'll clarify everything that we've said. I'm just taking notes on any additional questions that come up, and we will send something over next week for you all. So don't worry if you don't get a chance to ask your question or we don't answer it. The next topic that we want to talk about is VAT, VAT schemes in particular, how they affect you guys and the different ones. Is that something you can kick us off with, please, Rich or Craig?
Sorry, what was that?
VAT schemes, the different VAT schemes that affect these guys as contractors.
Yeah, so typically, if your customers are VAT registered, it's usually worthwhile becoming VAT registered yourself. And, the actual threshold where you are required to register for that would be 85,000.
Right, could I just interrupt on that one thing? The problem in the pharmacy is if you become registered for VAT, most companies won't give you any work.
Yeah.
So, yeah, just to keep that in mind.
No, that's fair enough. So do you want to continue with the VAT? Do you
want us to skip that topic?
I think probably best because, literally because every company that I've come across who's had this discussion, they've just said, we won't hire anyone who's VAT registered. So,
well, if anyone's any questions specifically about that, perhaps they can follow up. We can address.
I think that's more for anyone who's setting up their own pharmacy or independent pharmacy, something like that. But I think as locums, it really wouldn't apply.
Okay. Yeah. Well, the next thing we wanted to talk about, which we get asked quite a lot about, is banking. Bank accounts specific for limited companies. Which ones do we see? What type of application should they have? Functionality, etc. Craig, do you want to pick up on this as a topic?
Yeah.
Obviously, you tend to deal with our banking partners, and in terms of the type of difficulties that we see from switchers, that type of thing, and the benefits that we see in working with accounts such as Metal, the challenger banks, the app-based accounts, which are obviously much more further forward in terms of technology and application, and often have better fee structures as well.
Yeah, of course. So it is one of the big questions that we get. And, just an initial point, we would always say to ensure, regardless of your limited company or sole trader, is to keep a bank account completely separate for all business activity. So for any income that you're receiving, ultimately, as a limited company, it's a legal requirement that you have a separate bank account. For a sole trader, it's not necessarily a legal requirement, but it does make life a lot easier if you have that separate. It's easier to reconcile the accounts on an ongoing basis, show true profit figures, etc. So we do work alongside a business account provider called Metal. They're part of the NatWest group. They do offer a completely free business account that ties in seamlessly with free agents. So you will find most of the banks available. A lot of the high street banks, there's only two, I think, that I can think of that don't automatically integrate with free agent. So by having that functionality, it helps us as your accountant, and it helps you to see exactly where everything's up to at any point in time. We are seeing a lot of the challenger banks, so like Metal, Monzo, Starling, Revolut, all of the more e-banks, as they're quite often referred to, are becoming a lot more popular. I think a lot of that is on the back of coming out of the COVID pandemic. We saw the high street banks hit with massive backlogs for applications. It was taking between 4 and 8 weeks for some high street banks to open accounts. So there's nothing really that a high street bank does that one of the challenger banks wouldn't do. And with all due respect for the requirements that a small limited company and sole traders would have from an account, you simply need a vehicle that can receive funds and can pay funds out. It's as simple as that. You're not going to require a monthly subscription for it to have a business manager or looking for credit facilities and loan facilities. It's just not needed for the vast majority of you guys. So we would say look at these challenger banks. As I say, Metal is completely free that they offer, and they're constantly developing their offerings as well. So everything can be done via the mobile app. And the fact that it does link directly to free agent just makes things a lot easier for everybody.
Is that account free for life? Because I know most of the business accounts, they give you free for about a month or for a year or
so
months.
Metal at the minute, it does say it is free. They've on their website, they actually say they intend for that to be a continual free offering. If they ever did change that, they will give you plenty of notice. So yeah, they have no initial. It's not like an initial introductory rate. They are publishing that as a free account.
I think there's a question there. So
well, I've got two actually. I've got one direct coming to me. I'm working on a full-time role, but we'll be doing some locum as and when, mostly in the weekends. I do locuming through my limited company accounts, limited company. Is it worth continuing with my limited company or do the locuming as a sole trader?
Okay, I think I'll just quickly pick up on that one. It really does vary on each individual situation. Have a look at what level of income you're receiving from your permanent employment and the level of income you expect to receive from this, the locum role that you're doing. There's no clean cut yes and no answer as to which to use. It does come down to each individual circumstance. And also your intentions, will you be wanting to take that income straight away from the locum role that you're doing? Or do you have the intentions, to possibly build up a reserve of funds to draw on in the future? If it's the latter, limited company, because separate legal entity, you only need to have that income personally when you need it, be that paid via salary or a dividend. So it's a bit of I wouldn't say it's a grey area because we can give the answer, but it's each individual.
Okay. I think next question we've got is, can Starling bank statements be used as proof of the expense? From Hassan Khan.
As opposed,
is this for your limited company accounts, or Hassan, do you want to clarify your question?
I think I might tell you. I think it might be as what we always advise is to retain the receipts. And one of the things with the bookkeeping software is you can take a photo of that and upload it to the transaction. If there was ever a HMRC investigation, you've got those receipts there as proof of purchase. So I think the best way to do it will be keep any receipts, invoices for any costs. As a backup, you can see the transaction coming from the bank. However, just seeing a payment to Amazon, it doesn't show what that specifically was for. Whereas if you've got the receipt attached to that, which can just be uploaded directly to the transaction, and the transaction directly comes through to the bookkeeping software, then you've got that proof of purchase, and you can show that that's for a legitimate business cost.
Okay.
Hopefully that answers that.
So sorry, from another question from AG. Thank you for clearing it. Is this a topic one of you guys can discuss each person's personal situation? A bit confused with that question. Could you
maybe in relation?
Shall I clarify?
Yeah, please.
It was in relation to the conversation about whether someone who's working full-time can also do part-time work, and whether it's best to do it as a limited or as a sole trader.
Yeah, so that is something we would be able to offer. As part of our initial service, we have I head up a team of accountants and advisors where we can talk you through that. What I would say, with regards to whether you can do it or not, really does come down to your client or the people that you're working with, whether they wish to engage with you as a sole trader or limited company, which again, I think comes back to the whole IR35 discussion.
I think right now there's only about 3 or 4 companies that will only deal with sole trader accounts. The rest are pretty much dealing with the limited company. So I can probably see them switching soon because they're having huge problems recruiting. But yeah, the vast majority are on.
We're seeing that across all sectors, to be quite honest, especially the medical sectors. We do a lot in the veterinary sector. We're seeing something very similar.
Yeah, but to be honest, with local pharmacy, it doesn't make sense to put them on IR35 because we most of us literally work in different branches or different pharmacies, different companies every day.
Of course.
And it's, even if you go through the SES tool, it clearly says you're not a limited, you can work through a limited company. So yeah, I think that's probably going to change, but it's mainly Lloyd's and I think Alstom and a couple of other companies. There's someone who's asking what's the process for involved with, let's get the words out right. What process is involved if you want to change accountants? So we'll let you guys go through that. But I think the key thing is you've got to quote a pharmacy.
Yeah.
Yes.
Yeah.
Craig,
one priority.
Craig, sorry, before you answer that, before Craig tells you in terms of how easy it is to switch to somebody like us, it's really important that you have an accountant that specialises in your area. There's lots of them out there, whether it's Guerrilla or not. This it's becoming more your compliance, remaining compliant for people like yourselves. You, as self-employed limited companies, you are right under the legislative microscope. For those of you that have been doing it a long time, you'll know there's been, IR35 is not the first challenge or threat that's come to you. There's been a lot over the last 10, 15 years, and now more than ever, and I know obviously I would say this, it's really important that you've got an accountant that knows the way around this landscape in and out, that they do specialise in this. So, that would be, a really big tip that I get, especially you guys that are doing it DIY. Just make sure you've got the right systems in place. Craig, do you want to talk about switching?
Yeah, of course. So as part of our service, we would look at, somebody approached us and they were looking to switch. We would go through each, circumstance on its own merit, really looking at when the best time to switch or, how easy it is, usually falls in line with where your company's year end is. So if you are a limited company, optimum time is to switch at the start of your new accounting year and allowing your previous accountant to close out that year. Simple reason, most accountants like ourselves work a fee structure paid monthly across your accounting year. That's not to say that you can't switch through the year. You certainly can do. We can look to onboard you as a client. It just would mean, dependent upon when you do make that switch, there could possibly be a balancing charge at the year end to cover the cost of completing those year end accounts. Similar with a sole trader as well. Obviously, your accounting period works on the tax year. So, starting with us at the start of the new tax year is optimum. But again, anybody's got any questions or queries on that specifically, if you want to get in touch with us, we can talk through that on its own merit.
Another piece of advice with regard to selecting an advisor, just be careful. There's a lot out there saying things like, we can give you a 95% take-home pay. If you clicks on Google, and you will find these guys out there, they do exist. Our advice would be, stay well away from those guys. There's no such thing as a 95% take home, not legally anyway. We all have to pay tax, and it's important that you pay the right amount. Obviously, you have everything in place that you can to be as efficient and as optimum as you possibly can. But the reality is, all of our clients take comfort in knowing that they pay the correct amount of tax. So please just be careful. If you see any of those types of messages out there, just tread very carefully.
We've got one question. I'm not sure if this is going to be easier for you to have more of a one-to-one session with this with Sonny. So his question is: I've transitioned into property development from being an employer pharmacist. The property deals are built to sell and tied up in a limited company, which is then dissolved at the end of the project. It feels crazy, but lenders still want to see 2 years SA 302's earnings, 25k plus, even though I have sufficient capital in the bank. Do you have any angles I can go down without having to A, be an employee, and B, earn 25k plus as a locum, as it's not time effective for me to keep doing this in order to gain funding?
I think that's one of the lenders, isn't it? So,
is he using bridging finance?
Sonny, do you want to clarify that a bit more?
Or feel free to give us a call tomorrow, Sonny.
Yeah. Sonny, if you just let me know, or send me a message on Telegram, I'll give you Guerrilla's number, Dan's number, and then you guys can speak to them directly and get your advice and see what the best option is for you.
Yeah, sorry. No, sorry, I just managed to get unmuted. Yeah, it's basically all it is. It's pretty short. I've been a pharmacist for almost 10 years. I transitioned a few years ago. And the lenders, it's basically all forms of lending, whether it's mortgages for yourself or it's general, even bridges. They want to see a form of income. Now, everything I do is built to sell, and then the capital is just kept in a bank, essentially. But without an income, without me having to show 25 grand a year or paychecks, they won't even look at me. So I was just wondering if, apart from having the paychecks and the 2 years accounts on 25k, is there something else I can do? Because, like I said, I've got to spend X amount of hours in the pharmacy to keep getting the lending, and it's not really ideal.
I would probably say, Sonny, and I'm certainly no expert on that, but I think it's what Richard said. It really will come down to each individual lender as to what they're wanting to see. It's a difficult one because it is through the limited company. I understand you're not necessarily drawing income from it, but it really will be the lender's decision. I think, I can't really see any other way around that, to be honest.
I don't think there's anything else accounting wise, Sonny, that you could take advantage of to help that situation. Most bridging, short term bridges that do development finance as well, they would look at all your affairs. Obviously, it sounds like you know what you're doing, you're experienced in this, but they would look at all your affairs, obviously, and if you make them aware of your scenario, I'd be surprised if they wouldn't take everything into consideration. But
yeah, no, that's good. I just wanted to brush that past someone because I wasn't sure if I was just hitting myself, head against a brick wall. But no, appreciate that, and I'll probably follow up with you guys later on.
I think you'll find, Sonny, we have a lot of clients that are in property. This is another area that we are into. We've got several hundred buy-to-let investors. A lot of our contractor clients, locums, etc. If they build up a decent cash balance in the limited company, they will use it to buy investment properties, that type of thing. So it is something that we do come up against quite a lot. So I would imagine that your situation is not uncommon at all, and they will have procedures, the lenders, they will have procedures for dealing with people like yourself.
That's great. Thanks for that.
No problem.
Next question. What's the average take home for pharmacists with you percentage-wise?
It's a question we get asked quite a lot. What percentage can we get you? And I would say any accountant that would ever say we can get you X amount or the average is X amount, there's no necessarily truth behind that. It's each individual. If you're a high earner, yeah, your income's going to be high, but your percentage is going to be lower because you're going to be paying more tax. We never really want to give out an average percentage-wise, but we are here. Our service, the advice from an accountant, is there to maximise that percentage take-home based on your situation and obviously sticking well within the guidelines set by HMRC. I wouldn't fall foul of that trap of going for a percentage take-home because nobody can promise that because they don't know your situation.
Okay.
Yeah. I think as well, I'd like to add on that, what we touched on before about the way you can work for a limited company and the way the funds are distributed, because you can pay yourself in a way where you don't take all the funds out of the business. So, if you did choose to take all the funds and you were a high earner, you're going to pay a high rate of tax on that. So it's really how you want to structure the business, and we can talk through the options. We'll do some projections, personal tax projections with our clients, and say, look, if you have this much, this is how much tax you pay. Discuss other options like, do you want all this income now? Because if you want to put some aside for the future, stick so much each year in a pension. And there's other benefits of leaving some of the profits in the company. You might have a period where you decide you want a career break, or you go and do a job that isn't a locum job. You still got that money in the business to pay yourself dividends, and there's a lot of ways of looking at it. And like I said before, you can structure it where if you're married, you can have another shareholder who's your spouse, who also takes income from the company. So if you look at that jointly with yourself and your spouse, then actually the take-home pay as a family could be a lot better if those profits are split that way. So these are all things that we'd look at along with like expenses, and it's all personal to your sort of situation. So it's not always the same route for each person. People earn different amounts of money. They have different ideas of what they want to do and how they want to go about things. And that's the reason to get some advice. And then I suppose that advice is tailored around the discussion that I have and how you want to go about things.
We've just got 6 minutes left, so just quickly run through the questions. I've got one about Lloyd's Pharmacy, and if they don't want to pay into a limited company, and I use personal bank details for payment, does this mean I cannot claim expenses such as mileage and meals for the Lloyd's shift? So the way it's working with a lot of people is that they're set up a limited company as a locum, but because Lloyd's won't deal with limited companies, they're only paying into personal accounts. So a lot of the questions that we've had very similar to this was, can I still work through them, get paid into my personal account? Obviously, how is that going to impact the overall accountancy with the limited company? And also, can you then claim the expenses for that specific shift?
So, the short answer is yes, you should be able to claim the expenses. Now, and this is probably a fault, I don't know, maybe a fault of Lloyd's, but with IR35, that doesn't just go away if you just say, I'm only going to work with sole traders. You kind of, it's really looking at, is that person an employee or not? So, myself as an employee of Guerrilla, I do work for Guerrilla, I can't claim expenses. And just to say I'm going to pay someone into a personal bank account, it doesn't really sort of bypass IR35 as far as taxes. If they were caught by IR35, then the client should be collecting the taxes. So it's a bit of a funny one, that really. But if they're saying, well, we'll engage with you as a genuine sole trader, and as a sole trader, you are allowed to claim those costs. So yes, you should be able to. But it seems a bit hazy with the whole situation of why they're wanting to do that. And is it right, I suppose?
I think they've gone with what they call the triple lock.
Yeah.
So they don't deal with limited companies at all. And they're claiming it's to do with the GPHC contract, which has absolutely nothing to do with that. But that's their claim, because they can only deal with pharmacists and their name has to be on the register. So anyway, they've gone through the whole triple lock process, and we've had a long conversation with them about this before, and it's on our previous webinar as well, where we kind of went into a bit more detail about this. But their view is it is the best route because you don't have to deal with the limited companies. But I mean, I think most people I've spoken to, even the tax consultants and the HMRC guys, they said it doesn't mean anything. We can still investigate them, and because they're not dealing with limited companies doesn't mean they shouldn't be under IR35.
Yeah, no, agree. Yeah.
So Edel, is that something they've been doing since the private reforms came in?
Yeah, so early back in April, when the IR35 kicked in for the private sector, they sent an email out saying because of money laundering laws, we can no longer deal with limited company accounts because we don't know who is behind limited company accounts, which seems really like a very daft excuse because your name is literally on the bank account. There's no way of, you can't just bypass that. You just can't make things up and say, we don't know who is behind the limited company account because it's on the company's house. Plus the details of who they're dealing with will be on GPHC. When you have a pharmacist or when you hire a locum, you have your own specific list of locums for each company, and they'll have the full details on there. So, the excuse they use, they call the triple lock. None of that makes any sense, but to them it apparently does. But yeah, it came in April. That had a huge backlash. I think the lawyers have just done some survey, and they've got a massive difficulty in recruiting any locums. A lot of the branches have been closing, so I think we might see that change soon. Who knows?
I think just generally on IR35, I know we're not talking about that specifically today, but in terms of what we're seeing in the market and across some other sectors, when the public sector reforms came in a couple of years ago, there was effectively a mass exodus of locums, particularly locum doctors. We lost a lot of locum doctor clients, obviously with the NHS, effectively putting the shutters down and refusing to use them. A couple of years forward now, that demand has really come back. They realise that with the skills shortages that they need these guys, and I think we're seeing something similar already. It will be a lot quicker, with the private sector, obviously, companies being owned by shareholders. So it's going to be interesting to see what happens. So I know your sector is quite unique, but across the others that we see, it is interesting to see that demand is still there.
I think with the consultants, I think it was one of the large accountancy firms. I think it was Delaware, yeah. Or Price Waterhouse Cooper.
Yeah.
They worked out a special vehicle for the highly paid consultants to work outside IR35 for the NHS.
Yeah, right. Yeah, there's some interesting structures knocking around.
Yeah. So yeah, that's one for another webinar. So another one might be a silly question, but if you have a full-time job as a pharmacist and pay tax to your employer, if locuming isn't your full-time trade, and you do so on occasion but regularly, does your tax get judged separately when filing out self-assessment? That's a bit of a confusing question. Did you get any of that?
Yeah, so I think I understand that. So when you do your self-assessment, all your income gets put on there for the tax year. So what would happen is your salary that you get from your regular job, all the tax should be taken care of from that. And then your locum work, if you receive that as a sole trader, for example, or if you receive dividends, that's the next thing to be taxed. So this is where I suppose it's a bit less flexible as far as where you go with this, because if you're already earning high amounts from your employee job, up to the high rate threshold, the additional money that you're getting in from locum work, if you're sole trader, it's all going to get taxed at 40% starting point. Again, it's a little bit different with a limited company because it depends how much you pay yourself in salary and dividends to what tax rate you pay, but it's all going to go on your any income that you receive goes on your self-assessments each year that you receive personally.
I think two last questions we've got left. We're at 7 o'clock already. Is back to the Lloyd's one. So if they pay you into your personal account, do you then have to pay tax on it? So I'm assuming if they're paying you into sole trade, assuming that you're a sole trader account, then they wouldn't have taxed you. In which case, yeah, I think you'd still have to put that through and sort out the tax. But would that tax be higher though?
It depends on your total income, really. Yeah. I think as Richard just said then, if you're drawing income from your limited company, which is potentially pushing you into the high rate tax threshold, then yeah, the self-employment income is going to be added on, and you pay that at your relevant rate.
Okay. And the last one, how do you make sure you're paying the right amount of tax as sole trader, percentage-wise? If, for example, you work as a full-time employee and locum part-time, which then means you earn more from your employment and pay national insurance and some tax from your employment, what expenses can you claim off the self-employment if you're, for example, you get paid mileage or claiming subscription off your employment?
So it all depends. So with your employment, anything that relates to that, and with your sole trade, any expenses relate to that. So if your employer is paying for your subscriptions, you can't get the tax relief again and put it on your self-employed income. If they're not, you can have it as your sole trader, and any other costs should do that. So if you've got mileage for your sole trade work, that goes in, but it'll only be the mileage that relates to that actual work that you're doing as a sole trader. It's separate from your other employment. Expenses.
Yeah, I think it's important to keep clear boundaries as to what relates to each individual. So what income and costs relate to your limited company, what income and costs relate to your sole trader, and if you've got employment as well, what specifically relates to that will be dealt by your employer. I did notice that there was a question that popped up on the chat to Hedel saying about can we put our Lloyd's payments back into the limited company. The answer to that is no. If that has been paid to your personal account, you can't then pay that into your limited company and treat that as limited company income because it's not gone to the limited company. That would have to be declared as self-employment income based on the engagement that you have with Lloyd's.
Yep, and that is the last of our questions. I'll put this video up on our website. So if you want to have a look through it again to help clarify any of the questions that you've had, and also obviously Dan will send out an email next week to everyone that's registered on the Eventbrite today. So, guys, any last messages before we close?
No, just thank you for letting us be part of this. We will follow up. Don't worry if you've missed anything there. We'll follow up and cover all those. If there's any further questions, he'll just fire them over to me and we'll answer them as well. That's not a problem.
Yeah, lovely.
All right, cool.
Thank you very much, everyone. Thank you.
Cheers.
Good night.
Cheers, guys. Thank you.
Bye bye.
Thank you.